If it feels like we've had a lot of economic data thrown at us lately, that's because we have. But when you take a step back, a few important themes are starting to line up. First, inflation. December's CPI was largely in line with expectations. Inflation isn't falling fast, but it's also not re-accelerating. The stickiest parts remain housing and services, areas that move slowly, which helps explain why the Fed feels comfortable being patient rather than rushing rate cuts. Second, the labor market. Job growth has slowed, but unemployment has only edged up modestly, and that's not a contradiction. Businesses aren't hiring aggressively, but they're also not laying people off. At the same time, the supply of available workers is limited. So instead of a spike in unemployment, we're seeing a labor market that's cooling on both the demand and the supply side. Third, productivity, and this one matters more than people realize. Productivity surged again in the latest data, meaning companies are producing more without needing to add as many workers. That helps keep profits intact and takes pressure off wages and inflation at the same time. When you put it all together, this looks less like an economy hitting a wall and more like one that's adjusting. Slower, yes, but still supported by earnings, efficiency, and resilient balance sheets. And that's an environment where fundamentals, not headlines, tend to matter most. Thanks for tuning in. We'll see you next week with more insights.